My name is Carl Pearson. I'm a New York attorney, a graduate of Harvard Law School, and I represent homeowners and small businesses throughout the United States in foreclosure defense litigation, quiet title actions, and wrongful foreclosure actions, customarily to make the mortgage more affordable with a loan modification agreement, including any principal reduction. This video 106D, entitled Pros and Cons of Securitization Audits, is the fourth in a series of 12 related videos. The videos are being prepared for viewing in sequence from A to L. Now here's a history of securitization audits. The history, I believe, goes back to the 2008 real estate crisis in the United States, where real estate wasn't selling and real estate brokers had to find another way of earning a living. Instead of helping customers buy or sell real estate, some former real estate brokers started to help homeowners prepare loan modification applications in an effort to obtain a reduction of the monthly payment being made to the bank to make the loan affordable and to avoid foreclosure. Many of these former real estate brokers were taking money up front, such as $1,000 to $5,000 to get started, and in too many cases they were failing to work for the money that they obtained, with the result that many homeowners were swindled out of their hard-earned money. And on the other hand, there were many people also doing absolutely a good job. I want to add that. During November 2010, in a regulation directed to companies offering mortgage relief, the Federal Trade Commission put an end to these businesses by making it illegal to get paid in advance to help persons with their loan modification applications. And some of the former real estate brokers then figured out a new way to provide a service to homeowners. That service I call, and they call, the securitization audit, for a fee several years ago ranging from about $2,500 to $5,000, and now significantly lower because of competition. The securitization audit, as a practical matter, requires use of a Bloomberg terminal, which costs $28,000 per year to lease from New York City's Mayor Bloomberg's company, Bloomberg LP or Bloomberg Finance LP. Bloomberg leases about 318,000 of them for a monthly income to himself, or I should say his company, of about $1/2 billion or $500 million every month for Mr. Mayor Bloomberg. The Bloomberg terminal provides all sorts of information, including Las Vegas odds on sporting events, the spreads in credit default swaps for foreign nations, and an ability to drill down into filings with the Securities and Exchange Commission to find where, if anywhere, a specific note and mortgage were part of a securitization pool. The Bloomberg terminal enables its users to drill down into SEC records by searching first for the date of the note, and then, as to only those records just found, searching for the precise principal amount of the note, and then holding those reduced number of records constant, then the zip code for the property, and holding those records, finally the address of the property. So when a record is found with all that information, there should be only one record, and that will be for the SEC schedule, which was attached to the other documents filed with the SEC for a specific securitization. In this way, the user of the Bloomberg terminal is able to find the specific offering in which a homeowner's loan was securitized, assuming that it was securitized. To find this in any other way is more difficult and too time-consuming. Typical securitization reports are beefed up with about 100 pages of information, most of which is boilerplate, but is new information to the one-time purchaser of a securitization audit. The bank itself knows everything in the audit and learns nothing new when the homeowners send a copy of the audit to the loan servicer or lender, so that this purpose of a homeowner in buying an audit is not worth the expense, in my opinion. The audit typically has an affidavit sworn to by a non-lawyer, swearing that title to the note and mortgage are not held by the homeowner's servicer or REMIC Trustee because of gaps in the chain of title. The problem with the affidavit is that a judge will not allow the lawyers before the court to submit an affidavit as to their own opinion on who owns what. In other words, I'm not allowed to submit an affidavit giving my sworn testimony on who has title. and neither is the bank's lawyer. And this instead is done by presenting documents and transcript testimony and the results of other discovery, with the lawyers, myself and the bank's lawyer, arguing the points of law and the judge rendering his or her opinion on the legal issues involved. This affidavit in a securitization audit does not prove title, and it cannot be used to prove a negative anyway. When there are no assignments found by the auditor, this does not mean that there are no assignments anywhere. It means that the auditor did not find any, but they still could exist. It's difficult to prove a negative. That's why in litigation you have to find what the real title is, and once you know that, then you prove that it isn't what where you have a gap. You can prove that if you know what the title is, you know what it's not. So that is just part of the difficulties that we have here in proving title. The audit raises various legal issues which give the homeowner hope that they can eliminate the note and mortgage and obtain ownership of their home free and clear of the note and mortgage that they obtained years ago. But this generally is wishful thinking. The defects in title can be cured by the creation of appropriate instruments or by the filing of an affidavit in some states. At best, in most states, in most cases, title defects enable a homeowner to set back the foreclosure process and force the bank to start all over again, properly this time. As a result of defects, and to avoid the delays and costs of starting all over again, a bank will often be willing to give a reasonable loan modification agreement, now including, in many cases, a principal reduction, to be able to stop the litigation and bring the property back to, quote, performing, unquote, status once again. This is the objective most homeowners should have when trying to save their property, instead of believing that they can go all the way, as encouraged by many or most securitization audits, and terminate the bank's mortgage. The bank has too much money available for it to fight, and it ordinarily will fight, so be careful when undertaking to take away the mortgage from the bank. You probably will not be able to afford the legal expenses that could be involved. A good thing to remember is this old adage, never pick a fight with a person who buys ink by the pound. Translated, this means never pick a fight with a newspaper, magazine, or radio, TV, or cable station, because they can overwhelm you with bad publicity. Or to put it another way, never pick a fight with an organization that creates money out of thin air instead of having to borrow money. The banks don't borrow the money they lend to homeowners. They create the money merely by issuing the loan without borrowing on their part. Remember this about securitization audits. The persons who sell you a securitization audit do not take the matter into court. Instead, they provide a one-time snapshot of the financial picture of your note and mortgage for a substantial fee, and they are never heard from or needed again. You should seriously think about how much you spend for a securitization audit and whether you have enough to retain a lawyer who will probably need in your effort to save your property from foreclosure. Finally, to offset this a little bit, securitization audits definitely do have valuable information, and the existence of an audit does actually save me time and money, and I do like to see it, and I often feel happy when I get it. But if it is too costly, it is better for the client to hire a lawyer than to buy a securitization audit if a choice has to be made, or at least don't pay too much for a securitization audit. I'm finished with the pros and cons of securitization audits, and you should go on to my next video, 107E, Loan Modification Agreements. If you have any questions, please give me a call. My telephone number is 212-307-4444. I provide free consultations and represent homeowners and businesses throughout the United States as to their foreclosure problems, including the saving of properties through loan modifications and any principal reductions. My telephone number, once again, is 212-307-4444.